Hello. Good evening, everyone. Welcome to tonight's session. Ms. Nixon she'll be your host for tonight. Yes, once again, welcome everyone to the Learn from the Pro series of education webinar for this year. And tonight we are delighted to have with us our own market strategies from CGS Research, CGS-CIMB Research, Mr. Chua Wei Ren. So before I start, let me just go through quickly about a bit more about the Learn from a Pro series of education. Every year, in fact, this is the third year running, we will gather market experts to come together and share with us their insights and their methodology of how they trade and look at the market. And this year, we have the Learn from the Pros running for the third year running. So this is series 3. And we have with us 3 market experts this year. We have Kong Hao. Kong Hao shared with us for the very first session at the end of August, 31st August. So some of you, I hope, attended the session. If not, his webinar is actually recorded, and we are sharing the webinar recording on the website, which I'll share with you later. We also have Mr. Ho Seng Fu. Seng Fu is doing a workshop. So this is a series workshop, a 4-session workshop, the whole of this month, starting last Thursday, 7. This Thursday, tomorrow, on the 14th, 21st, and 28th. So this is a 4-part workshop. And so this is really intense, where we get to learn his super stocks trading methodology, how he looks at the market, and the exact methodology that he used to actually trade the market. So don't miss out on this. Again, for those who registered, you may have attended last week's session. If you missed last week's session, fret not, tomorrow, do turn up. But to note that Seng Fu's session will not be recorded because his workshop is because of intellectual property, as well as his workshop is actually a paid program outside of CGS-CIMB. So to protect his IP, no recording will be shared for Seng Fu's session. And last but not least, of course, we have our expert today, Wei Ren. He will be sharing with us this series of webinar called Charting Markets. So we will be coming to share with us every month on a monthly basis, and we will get to see how he looks at the market. And also for those of you who are our client, you might be also receiving or checking out the Transporter Analyst Report, which Wei Ren puts up every day. And he will also discuss a bit of that later on in this webinar. Okay, just allow me to get you the link for Learn from the Pros. All right, I just shared the link for Learn from the Pros on the chat box. So if you click that, you can go to the micro page, and you can see all the webinars that's up for registration. So do register for the webinar that you're interested in, and also feel free to share this with your friends as well. So next, allow me to just quickly do a quick disclaimer. Just take note that whatever is presented today is presented to the best of our knowledge. We are not liable for any errors or so-called representation. Please check and do your due diligence. In no way are we suggesting any trade calls or investment advice. So if you do wish to invest, do your due diligence and check with your licensed broker or financial advisor. So with that out of the way, I'd like to introduce our expert for today. He's none other than Wei Ren. He's also a certified CMT, market technician. He's a market strategist with CIMB Research with over 12 years of experience examining and predicting price movement in the financial market. So Wei Ren specializes in technical analysis and macroeconomics, leveraging on price action strategy and with as well as classical technical analysis to spot market entry and exits. So I'll just quickly pass this to Weiren. I'm sure he will share more with you about today's session. So Weiren, I'd like to pass the stage to you, please.
Yeah, sure. Thanks for the introduction, Nixon. So just allow me to share my screen. All right. So before I start, just want to do some quick quick check. So the sound check. First, type 1 into the chat box if you can hear me and then see my slide. Type 2 you can't see my slide and can't hear me clearly. So yeah. So okay. So another thing I wish to do is who's type 1 if you have heard my presentation before, be it whether it's during COVID time or during it's new. So just let me know so I can gauge what can I do later on to do. All right. So 1 is for those who have heard me before. Yes, SK, I remember you. And then 2 is for those who have not heard me. So I can gauge how's the crowd like. Okay, Zachariah. Okay, 2 James. Okay, welcome. This is the first time. Okay. So okay, there's quite a number of first timer, and I saw some familiar name on this. All right, so thanks for the feedback. Okay, so what's the topic going to be? This is the first series, so you can look at the obviously I'm going to use charting as a ways and means to guide you through the financial market and global market. But first of all, I think before technical analysis is used, I think I will go through the global macroeconomics environment right now, especially after post-COVID. What to expect and what is the inflation pressure that you can see? Is it due to monetary policies or is it just the unseen supply side chain that which the Federal Reserve can't actually is hands are tied. All right, then after that, I'll go through what are the mainstream strategy that used by traders nowadays, and then finally can use my transporter to help you gauge to help you make a better informed decision on this. All right, and then lastly, I think Q&A. For the Q&A section, I wish to be interactive. So any stock counters, be it anything, you can ask me and then we'll do it, and then I'll do it through using the step-by-step strategy that I've used in the transporter to guide you through the thought process on it. All right, so without further ado, I think let's go on this. So for the macro environment, you can see that inflation and interest rate is now at is tape. All right. So after gaining about a high at 6% last year, now is reporting at 3.20. But the core CPI number is 4.7%. Actually tonight, right? Actually around 45 minutes more will be the CPI release number. My guess is that the CPI number will edge higher due to the increase in oil prices. Oil prices actually is going towards $90, and I think today is standing at $87 to $88 per barrel from the last I saw, based on the futures contract. All right, so normally, traditionally, September is normally the contract expiry. So normally, during this period of time, the futures actually will the commodities actually will see some downward pressure, but it seems it's not. So people are pricing in the rising prices of oil. So we are likely to see some further inflationary pressure on this, and then there are also some other supply side issues that is going through to add on to the inflationary pressure, which I will touch on what are the key factors to look out for. All right, but I think on the surface it looked like it's tame, and then the Fed says yes, finally we are on course to battle inflation, but inflation is not yet done. And then if on the side note, if you look at Japan has finally get it through, has already broke the 2%, has already see their inflation pressure coming in. But is it really true inflation for Japan? I highly doubt so, because first, yen is weakening against the dollar, and secondly, with the Fukushima Daiichi nuclear reactor being shut down, the energy, 90% of the energy are imported from overseas, particularly fossil fuels. So with the rising price of fossil fuel and rising cost of the dollar, that's how explain the inflationary pressure that is seen on the Japanese market. But if you look at how the consumer pattern is like in Japan, less likely there are less people spending. So it's just that let's take example like a year ago, maybe 10 years ago, a price of a udon cost 200 yen. Now it costs 350 yen. So, but I still eat the same. But there's an increased price and salary, and the salary is not catching up in Japan itself among salary workers. So this really add through the inflation. So all you put piece together, inflation is no longer a monetary it's no longer a monetary failure. Although you do account to that, but it's more like a fiscal and supply chain error going forward on this. All right, so if you could look at the US inflation and interest rate, the Fed fund rate still stands at 4.83%. It has dropped. And then we are still far away from the 2% mark. Core inflation is not at 5%. It's actually at 4.7%. And then you can see that while inflation is going up, you can see that the M2 money supply has seen a stock increase on it. The 2% mark of the inflation is still not likely to be reached. And then with the oil prices rising, there's a tendency that we might see a potential rise in CPI number, particularly today. And with the summer effect, because summer is the place, is the period where you can see a slight increase in CPI. Historical, traditionally, it has done so on this. All right, so another thing that on the macro environment is the banking crisis is not over yet. Back in February, not wrong, the regional banks actually failed big time. This actually caused a lot of panic in the financial market, and then this time around, the Fed actually stepped in, and the government stepped in earlier to save it. But is it really over yet? I think I highly doubt so. First up, I think there's still continued outflow of the funds out of the regional bank itself. So there's a possibility that next year either end of this year or next year we'll see much more failures of regional bank. A high probability that we'll see. So this brings me back to like what is happening, what has happened in 2008. So if you are, I think some of you, if memory serves you well, 13 years ago, 13 years around 13 or 15, 2008, 15 years ago, when Lehman Brothers collapsed, exactly 15 years ago. I remember it's mid-September. It collapsed after 9/11 memorial. Backtrack into March 2007, where Bear Stearns actually failed. So this whole thing is actually going through round and round again. So the cycle repeat itself over again and again. So there's a possibility that we might see this bank failure. And then the credit rating, the credits itself, I think due to higher cost of lending, I think, and then the outflows of capital, banks, including large banks like JP Morgan, Goldman Sachs, Morgan Stanley, they are less willing to lend out rates at the current. It means that, and the Federal Reserve has kicked out a new rule that in order to issue more debts, you need to have additional $2 per debt that you issue. So this caused Jamie Dimon to actually make a hoo-ha on yesterday during one of his events. He's speaking. He says that it's impossible for them to do it. Liquidity will dry up and that will crash the economy. For more information, you can actually read more detail in CNBC or into Financial Times. I prefer Financial Times though. All right, so the next thing is Financial Times recently released a report on regional banks. They are still facing outstanding loans of 880 billion. So you may ask, where's this outstanding loans come from? It actually comes from this Federal Reserve last minute resort lending facility. So this actually is on the highlight of the SVB bank's failure. Actually, there's 880 billion being loaned out by the Federal Reserve, means that those regional banks, or I say all these regional banks, right, they are stealthily taking up this lending facility to tide them over. But with the Fed rate increasing, all right, they are facing a very tough time. Actually, a lot of companies, savers, actually have pulled out funds from the regional banks, and then they have pocket into the big banks like JP Morgan, Goldman Sachs. But the big banks are not committed to pay them at the usual rates, and the savers are okay with that. So it really says how much the financial system in the US is now at a stress test period, all right, that where anytime it might just collapse on this, all right. And in the West, they have this, they always how they actually solve their problem is actually creating more problem, all right. So it's like the regional banks, they will actually sell more additional debts to fund their activities. So they are digging more holes, and then the holes are deeper and deeper, and until they can cover it, the whole thing is going to blow up on this. All right. So let's go through quickly on the economic activity after month of contraction. So the non So okay, on there are two segments on it. The manufacturing PMIs and the non-manufacturing PMIs. Non-manufacturing PMIs are back at above 59, is standing at 54. One of the most strongest trending for the past 3 months. All right. But for the manufacturing PMI, despite 3 months of consecutive rise, is still below the 59. Is at 48. So it shows something that the manufacturing sector is not picking up in the US, where in the account of GDP, actually the manufacturing owes around 60% of the things. All right. Although there's a saying that 70% of the GDP is service sector, service related, consumer base related in the US GDP, but I think the manufacturing do see some effects out. And on a side note, I think the amount of new home sales has been dipping due to the rise in mortgage. So average mortgage is now at 7%, and that's provided that you have a good credit rating. If you have a very bad credit rating score, your lending rate may be up to 11%. So who will actually has the resources and the tenacity to actually find service more loans on this? So it's really going to be a very much a question on this. All right. So actually, I'm going to take some time to talk about what causes the inflationary pressure from the timeline. All right. So it all started, actually the first blow up actually started back in 2016 and 2018. Sorry, I keep confusing with 2018, where the trade war actually started. All right. 2018, Donald Trump actually launched a trade war against US, and then there's a big hoo-ha going on, and then it caused the financial market to have a very jittery effect, that where you see the Dow actually from 2016, it has actually consolidated, and then 2018 it saw a very strong dip. It's in fact stronger than what last year has seen. All right, and then you have this, and then one of the most serious one is the COVID-19 lockdown. Right, the outbreak in 2020 Jan, and then after that it goes into a lockdown where supply chain, where activities was almost halted, because this is the first time globally it goes into lockdown. So no activities. Airport is dead. I think those who have thrived well, recession upon recession, I think they saw this and then they broke down. One of them is, I think, a famous Japanese textile manufacturer. It has gone through 100 years, survived World War II, but COVID, it declared bankrupt. All right, so the lockdown aftermath, it caused a lot of backlog on this, and plus a couple of extreme drought and extreme hot weather throughout the year in 2020 actually caused a very bad harvest. Imagine a lockdown, plus a weather effect that sees actually the wheat futures and the corn futures actually soared almost to a new high. And then in 2021, in January, Suez Canal actually, there's a obstruction. So don't belittle this obstruction, because because this obstruction actually causes much of a blockade that cause a supply chain to actually have a lot of backlog effect. All right, and then after that, COVID second lockdown after the Delta virus, that was I think in September. In Singapore, we go to the heightened alert, and economy just go through. But during this time, the stock market just rallied as usual. All right, then last year, 2022, Russia invasion of Ukraine. And then finally, I only know in 2023, which this year, extremely hot weather. I think Singapore goes up to 38 degrees. And then China, during April period, where it's going to be April-May period, it actually reached a high of 40 degrees. So this actually caused a much of food production. It's likely to be high. Actually, we saw a wheat future go up to $690 per bushel on this. On a side note, I think Russian invasion of Ukraine, I think the war is not going to end so soon. It might go through, I think, drag on to a decade. And then geopolitical wise, I think as long as the US presidential election is ongoing, I think the Russia invasion, the Ukrainian war is likely going to persist longer. All right, this is in interest of the US government. All right. So from until now, I think the most crucial effect is that the supply chain has really caused much of inflation pressure, although inflation has come down, but it's not as much as we like to see. Oil prices is still rising. On the side note on oil, the Americans are buying up more, are stopping to buy up more the reserve, the strategic petrol, SRP, strategic petroleum reserve, SPR, sorry, strategic petroleum reserve. So they are kind of like they are limiting the supply, they are limiting their buy, and as such, I think is going to cause the oil prices to soar further. All right. On the side note, on the Federal Reserve itself, I think why the Federal Reserve is not going to stop, why the Federal Reserve is going to continue rate high is because I think it has not finished, quote unquote, crashing other people's economy. That's what they like to do it. If you remember, 1997, they actually did it by crashing the Southeast Asian economy. We have the famous 1997 AFC. So what they do is actually by rising interest rate, and then after that force the country where debts in US dollars, force them to pay back in US dollars instead of local currency. So it create a lot of pressure on the economies that actually went on to take on the debts, too fast of expansion, and then much of greed. And then after that, all the domino effects in place. So I think right now, China is their main target. With Country Garden recently reported much of their debts are denominated in US. So this is going to be a very tricky issue. We shall see how is it going to be like going forward on this. All right. So 2023, we see very much the market actually entered in the bullish phase, where the S&P 500 actually break above the 20% gain. So the thing is, has the bull market really comes? I think later I'm going to show you a chart. I think we are not. I'm not very confident of a continuation of bull market. I may be wrong, but based on the chart, based on the rebound that I've seen last year October, it's not going to be very strong. There may be a flush up to take up to a new high, but after that, it may be a stronger correction. I think if anybody familiar with me back in the past, I use a wave method to time market. Is I use a wave theory, the Elliott wave theory. So right now, the whole section, I think from 2022 January until now, is we are all in the larger ABC corrective wave. All right, so the sentiment recently become a bit euphoric with the Goldman Sachs CEO taking that actually we are kind of like have the probability of a soft landing is not getting there. In fact, we are not getting recession. So when large cap CEOs are talking, large bank CEO are talking about this, I tend to think contrarian. And you look back history, is always the same. So then another thing on the side note is how to know when the bear is here is when to sell the market is when Times and Economy magazine post a picture of a bull in front, and then they say, hey, the bull is back. All right, we are entering into a new high. That's the time where you can sell. Yeah, because I think economists, the Economist magazine, the writer they want to be right, so they will just go through with the sentiment, right? But people are the institutions players, they often think of contrarian method, so they sell on euphoric high. All right. And then the third point, the second point I've already done mentioning is about the Feds, the rate hike that the Feds are doing it on this. All right, then I thought about the rally in 2022 October is rather weak, or rather it remained corrective. Later I'm going to show you a chart on this. All right, so so another indicator I look at is the 2-year 10-year spread. All right, so when will the economy start to crash? Based on the yield curve is I know a lot of people face, yeah, it's inverted, so we are looking at a recession. Yeah, you're right, but there's one more caveat is when it actually inverts and then it sharply raise up. So back in the 08 financial crisis, prior to that, 05 or 07, we see a inversion in this. So you can see there's a typo on this, so pardon me. All right, so inverted in 08, 09, this is 01, all right, 2001 before .com. So inverted in 2000. Once it crossed above the 0 line, accelerated, then it's a sign that, hey, we are likely to look for upside, all right, on this. Okay, then I mean, if there is a accelerator above the 0 line, then we are likely looking at a possible correction of the market, or you say quote unquote crashing the market. All right, it has been playing out well. Unfortunately I do not have enough space to cram all it, but most of the time it works in this way. So this up to today. So I think we still have not seen the 0 line. So if after the rate hike or something, there's acceleration, then we are likely to look at a possible downside on the market. Right. Another clue is Fed fund rate. All right, where the Federal Reserve announced a rate cut. Right, you can see that when the Federal Reserve paused into 2020 in year 2000, the millennium year, that I was taking my PSLE at the period of time. So it aggressive rate cut, and then the first, second rate cut, and then it goes into a dot-com bubble recession in 2001. Same thing. In 07, it paused for a bit, and then announced a rate cut for no reason, and then it crashed. I know COVID period, I think 2019, if I remember correctly, 2018, they raised the rate. 2019, they paused the rate hike, saying that it's nearing a 2% inflation. I remember Jerome Powell was saying that. All right, and then September 2019, they announced rate cut, and then December they cut one more, and then you can see March it crashed out due to COVID. All right, but you can see that during this period actually, when they announce a pause, you can see the market actually has a limbo, is actually trending within expanded triangle on this. So right now rate is increasing. Fed fund rate is at 5.33. So once they pause for a long time, cut, that's the first signal. All right, so when's the first slide of rate cut is, I think, next year, November. Traditionally, when the election is going into favor, the Federal Reserve tend to match the incumbent, right, hoping that they get a second term on this. So they will cooperate, and then the Feds will actually cut the interest rate on this. And then when they announce it, then it's likely to come. Next year, 2024, thing is that mid-January, I'll be watching how the market is going to react. So if the market react adversely, a strong sell down, then we might be looking at a possible impulse bearish wave down to the downside again. All right, so looking at the chart, I think you can see that the 3 times is a charm. So in this case, if the Fed announce 3 rate cut, and then it's likely to be a signal that hey, the market is ready to tank. All right. All right, so the next one is the labor force. I think the labor force is one of the barometer that I watch on the market. So back in, I think, 2021, the jobs actually went up to 10 million and then to 12 million at a peak on this. And then, but it has seen a dramatic fall. Reason is because I think there's lower demand, and then NFP remain at 187K. Unemployment rate actually tick up from 3.4% to 3.8% now. Still far away from the natural rate of unemployment, but there is still things that we are likely to see a possible reversion up to above 4.2%. All right, so quickly go through what are the countries that I still remain bullish. Mainly it's India, and followed by Japan. US at the moment, yes, and then actually in ASEAN, I'll prefer Vietnam on this. All right. All right, so for the Nifty 50, it actually nearing to our 20,000 target inside. Actually, on a side note, Nifty is actually one of the India market is one of the market that actually break new highs. I cannot find any market that actually break new high. In fact, it broke the COVID high, and then it broke the 2022 high. So it is on a very strong bullish market. One of the strongest I've seen actually. Despite some correction down, I think it still remains supported at 19,200, and then it's on the upside. Reason for why the Indian market is on the bullish side is because China is not doing well with all its problem, and with the trade war and the tension going on. The spillover effect goes to India, and then India has 40% of a lot of manufacturing, like especially Apple, flows into India. So that explains how the India is going on to be a very strong market on this. All right, so with that, I think I end all the global market. So if you have any question, I think there's question of, is recession coming? I think this too early to say, but based on the model, based on the chart, I think based on the numbers that is seeing, and the banking crisis, I think there's a high probability that we might see. But but you ask me when's the exact date, I can't tell you. Even Michael Burry can't, because Michael Burry is 2 years early into the recession. He actually bought a call put premiums in 2005, right? So recently he put in. So if we can time earliest, maybe conservative estimate 2 years later on. All right, so this is all the best I can, but just watch out for the numbers, and that would be the best. All right, so right now I go into another segment is I'm going to be very focused on what are the strategies that you can use, and types of there are which after that, I think for retail traders like us, we try following momentum trading strategy, mean reversal strategy. Sophisticated like quant strategies, arbitrage strategy, all these are more of the institutional. I think as a retail, we can't do arbitrage. Quants you can do it, but limited to foreign exchange because they provide more liquidity on this. All right, so first up, I think trend following strategy is the most popular and the most easiest one. There's always the saying, the trend is your friend, so just follow the trend and then you won't go wrong. but the pros is you can ride on the trend, and trend following. There are more. There are a lot of systems out there, like such a moving average system, breakout system, like breakout of the ascending triangle. Pattern recognition is like double bottom, continuation pattern like bullish flag, falling wedge, all this, and intermarket analysis like when bonds, when commodities spike up and then followed by bonds, there'll be a bonds is much more like a dollar rising, then it might cause a crash in a correction in the equities market. Right. What are the cons of the trend following system is actually subject to whipsaw. Because certain times a market can be in a corrective phase and may extend further downside. But despite that, I think major trend remain intact. One of the very good example is the U.S. market. The U.S. market has been on a bullish. If you track out on the money chart, right? If you can, you got the time. Go into money chart, you can see that from the rate progression until now, it has been on a perma bull market on this. So during this phase, if you can catch like stocks like the Dow 30 stocks, like maybe for energy, you can get you want the stable one, you can take on CVX, Chevron, ExxonMobil. Banks will be like JP Morgan or Goldman Sachs or even Morgan Stanley. Recently, the Magnificent Seven, such as NVIDIA and some other tech, Tesla, all these have been doing well. So if you follow the trend since January for NVIDIA, you would have really continued to ride the trend on this. All right, but you must be able to take on. You must be able to during this phase. You must be able to. I want to say, bear the whipsaw losses. All right, and then your risk could be very much on it. But and then another con is that trend following may not work during sideways market. Sideways market, especially in the Singapore market. All right, the Singapore market has been, the SDI has not break new highs since 2007. The highest it went was 3009, and you look at the CIMB, is on the downtrend. All right, so look at the SDI. Most of the stocks are actually sideways market. So right, so it may not work well. So during this sideways market, you get trend, you get easily trapped, and then your opportunity cost may be gone on this. So the next one, to add on to the trend following strategy, is the momentum strategy. The adding on to the trend following. Okay, key pointers and characteristic of momentum trading is one of the most profitable, and then for the last 10 years it has been gaining much more what do you call it, popular. First is because there's a studies for the past 40 years. I know about these studies in taking my CMT program. Is that stocks tend to do well or tend to do worse. It will carry on for the next 6 to 1 year. All right, it means that momentum, it will carry on. All right, why is because trend following, people will keep on adding stocks on all this, and then stocks will continue to do well. I could not find any cons for this momentum trading strategy, and as such, later on I will show you some of the example of the trend following and momentum. All right, another thing is mean reversion. So what a mean reversion strategy is, it means that asset prices tend to return to mean. So when stock is actually rising on, has a parabolic rise, especially when a stock goes to a 90-degree upside above the resistance, there may be a correction down on this, and then what do I say? Yeah, so there may be a correction down on this fact and such. Once the correction comes, it goes back to the support or the resistance support, and then there may be a rebound, carry on the trend, or it can be a bottom out strategy. It means that prices has a climax sell off, reach the bottom of the bottom exhaustion, and then the stock actually revert higher on this. So what are the if for mean reversion, right? If you are familiar with volume, it actually can help you to gauge when is the the thing's going to change. So later on we can see it. So on this, all right. So before I Q&A, just want to share my transporter pick on certain things. So just stop share, and then I'll share on the STI. Okay, so all right, so for the market, I think just go on through the STI. I think STI, this is what I mean by not trending market. This worst kind of strategy to use for trend following, because unless you do a subtrend, but it's not, it will be very short term. First up, I think when prices actually have a parabolic rise, just as you thought you're going to break 3,004, nope, that it came down on a very strong three-wave impulse move. So rebounded at the bottom at 3150, but I think sell-off is seen, and then correction came down. So on the side note, I want to take a chance to say this is 3190, 3175 is the support, intraday immediate support that looking at to bring up to 3260 to 3290 on this. All right. Furthermore, I think for momentum kind of strategy that you can look at it. First up, I like to use stochastic MACD. Rate of change also is a measurement of this momentum. So for STI, I think momentum is down. All right. MACD is down. Long-term MACD is down. Mid-term stochastic is down, or despite a crossover, not strong. And then the 23 period ROC is down as well. All right, so for transporter, this one of this. So if you are a client, all right, or if you are not, you actually open an account. That's fair and simple. I think Nixon can guide you on that. You do not need to fund anything. That's what I know. And then you can just read on the report that we have. So today I did one report on SGX. So let's take a look at SGX. Why we just go through why. 为什么这样? Okay. Okay, it's loading. So let me see. Okay. So SGX. Okay, so it's SGX. Okay, so guys, if you have any questions, like you want me to cover any stocks, want my opinion on any counters, all right. I can, as long as there's a chart, I can do with you, and then we can do the strategy, the thought process on it. So it will be best if you can ask me a question on any counters we'll do. All right, I love to do this. All right, and then we have a discussion on this. No problem. You can disagree with me, and yeah, you can actually it will be good. All right, on this. All right, so for the Singapore market, why SGX? Not because I love SGX or what, but it's because let's look at something on first strategy that I shared on, or be a trend following strategy. All right, the trend following strategy first is it on the uptrend? Okay, so let's make it interactive. All right, let's make it interactive. Okay, so let's type the type 1 or type 2 into the chat box, or you can type out your desired answer. Okay, so type 1 if you agree that this is uptrend. All right, type 2 you think it's not, and then why it's not uptrend. All right, you can just say anything you want. All right, you can say, or because you don't like my face, or what also can. Right, is it an uptrend? One, James think it's uptrend. Yes, thank you. Only James. Well, there are 100 of you all, but only James answered. Just kidding. All right. All right. So James, yes, thanks for participating. So first of all, it's uptrend. First of all, how to determine uptrend? Higher high, higher lows, higher high, higher lows, and then you can see that right now is from since the period of May, it has been consolidating at the top right, but higher lows are the signification of condition uptrend. Second thing, ascending triangle. Okay, whatever I write out, right, you go and find out about the thing. All right, the patterns I write, and then yeah, and then you can see. Okay, so ascending triangle. And then the last thing why I decided to do a buy. All right, it's because Ichimoku is showing prices are trending above the Kumo, the cloud support. Even you don't know Ichimoku, one look you know that prices are trending above, so it's a rather uptrend. All right, price action. Next price action is because resistance at $9.68 have been tested multiple times since May until now. All right, imagine test one time, correct, test one time, high low, 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 means that this resistance is likely to be broken. So we are likely to see a potential break on this. So let's look at today for market open. So how is it like right now? All right, we did see a edge up after a correction down. So high probability of it breaking the resistance again. Another thing I forgot to upload the update is the rising MACD with the my MACD is there on the 9/12/26. I did it 50/220. This is one of the portfolio manager has this strategy. On if you are interested to connect with him or invest with him, let me know. I can link up to you with him. All right. So he has this which is very accurate. So why is it? Because by lengthening out the MACD, right, I get more accurate reading. I do not have noises. If you use the 9, 20, and 12, right, have many crossover up here, there, no, not here, not there, not everywhere, all this kind of issue. So with the crossover, all right, you can see that it confirms with the oversold crossover of this, you can see that this is a mean reversion strategy. All right, crossover confirm oversold, but MACD is down. So wait for initial buy, maybe I wait. Okay, so so a crossover means that uptrend is down, but correction is down. So I have another chart pattern is called the flag, or you can say a flag pattern, a 3-year corrective, and then I use a Fibonacci to see where is the latest support. So okay, come hold, it rested on the 50 and then crosses. So I think that longer term uptrend is likely to come despite it going lower, but remain with that intact within this support at around 8.62, and then prices go on and on and on. All right, stochastic wise is on the rising trend as well on this. All right, so you might think that I may all this I may say, but I do have failed track. So August 14, I do a mean reversion to the upside on Bestwall. Crossover, oversold, yes. Bullish engulfing at the support, yes. V-shaped rebound, yes. Broke out of the downtrend channel, signaling a possible reversion to the upside, closing above 9 period Tenkan-sen and Kijun-sen. Ichimoku is the first sign. Yes, there is, but look at that. 14 August, all right. This period, okay, so 11, 12, 13, 14 August, all right. Came down, consolidating. Right now, this is a trend that I don't like, especially at the bottom. All right. No strength, although Kumo twist, all this MACD crossover already, but it's going to take some time. All right. Bestwall, Dr. Secret, I think recently it was on CNA. All right, so is popular and volume is dropping. So this stock, if I enter it and then I think that I want to cut my loss, I will cut it now and then wait for new opportunity, or maybe look for other large cap stocks as well. Most successful one before I go into Q&A is DBS Holdings. I did this on June the 5th. All right. Mean reversion strategy as well. And then after that, guess what? I did it over here, got oversold, double bottom. Normally when there is a, just side note, when there is a climax sell down, right, on the volume, all right, on this, there is a inside bar, and then this signal a possible exhaustion, and it did not break the new low. It did break, okay, $30.39. You want to be very exact, yes, it did break. It did break and close, but the next day with an inside bar harami, we are likely to see a rally up. So indeed, it came up, and then right now, okay, so let's do a fun one. All right, so based on the price action on now, all right, any answer? Do you think we should enter a buy for DBS or not? All right, or just type in 1, you think agree, 2, you don't agree. All right, just be very interactive. All right, do you think we should enter DBS based on the current trend, current momentum? 2, no. Yes. 2, no. Okay, no. 1, okay. Next thing that is, all right, both sides actually okay, the no is more. Okay, why I think so no, right, is because Rather, I think the pullback is rather steep. We don't have a higher highs. It's on the sideway now. Although there may be a breakout, but it may be capped at 34.23, aka bull trap, and then came down. So if you talk about risk to reward on this, it's only a 2%, not worth lah. I'd rather wait until a pullback back to a 3-wave correction down to 31.91 to gain up a upside to $36.20 on this. All right, or wait for a break above the zero line, or a confirmation of break above a strong break, a slight break above the range, then we can go in. All right, that would be good. All right, but for the ones, all right, those who think that they can buy, also not a problem. Why? Is because the bullish candle actually closed stronger today. Consolidation normally followed by a rally. That means we are playing on a bet on a breakout on this. But to me, I won't actually do a buy on DBS. All right, last one. All right, Yang Zijiang. I think Yang Zijiang I did Yang Zijiang not financial. Yes, I did it. Did a Yang Zijiang bullish break on this. All right, Yang Zijiang, let's make it interactive as well. When we go to the chart, later I'll sell. Okay, so Yang Zijiang, mean reversion strategy as well, but it's more of like what do you call that? Bullish break, flag, and then after that, key resistance zone breakout onto the upside, targeting $1.55. True enough, I think. Wait, where's my Yang Zijiang? Okay, so we were here that time, and then prices keep on rising and rising, and then hit a terminal high at $1.79 before coming down. So my question is, based on the price action, based on the momentum, do you think we should buy more, or do you think we should cut, or do you think we should aggressively we do a short sell on this? All right, tell me your answer. 1, buy more. 2, don't buy. 3, short sell. Okay, that's type answer, and then we will do a very much 3, short sell. 2, Diana said 2, 3, short sell. Wow, okay. Hey, actually, more of you. Okay, you're right. Okay, so most of you are very good traders already. I think most of you have a very good thought process already. All right, so why our short sell? I consider a short sell. Why? Is because first, diamond top pattern. All right, parabolic rise on the trading August, and then followed by a slam down. Upside is rather corrective. Weak candles means that there is some sort of like in between during the days there are some fighting on. Although the bulls win, but it's not a very strong win. And then finally on the just break out above this high at 1.73, and then followed by a sell down. Ichimoku is showing the baseline and the conversion line is facing a crossover, so likely a crossover. And then momentum wise, can see that we got a dip, we got a lower highs on the what do you call that, on the 23 period or change. We got a lower high, means that momentum is weakening. Dip has already dipped over zero line, so this is likely to be a very sell down. All right, and then volume has been dipping, so diamond top with all this, a clear signal that this is going to be a selling stock on this. All right, okay, so yes, head and shoulder pattern, yes, you can see it, but I prefer a diamond top, but head and shoulder is right. All right, you can use it a head and shoulder. Yang Zijiang Financial, I initially have a buy, so let's look at YF8. Okay, so before that, before the Q&A, I'll hand to Nixon, and then I know it's a bit overrun, but please stay on. I wish to cover all the Q&A. There are 8 Q&As over. So Yang Zijiang Financial consolidation, not here, not there. I'll suggest cutting it. All right, so I'll just stop my sharing here. Don't leave. I will still answer my Q&A. So Nixon, to you first. You
right.
want some announcement?
All right. Thanks. Thanks, Viren. Okay. I can see my screen. I'm sharing with you a screen with the feedback because we would like to get a feedback on the session. We do this every webinar for getting a feedback so that we can improve on the next webinar, as well as, of course, your feedback actually support us to continue bringing this series of webinar to you. And we want to come back. We want also to learn from approach 4 to happen next year as well. So hope all of you can take some time to do a feedback. I'll just share the feedback link here. Yes, so with that out of the way, we'll quickly just go to the Q&A. So Viren, please go ahead. Viren, you're muted.
Okay, thanks, Nixon. Please give me your honest feedback as well. I need it. I need it to better service you all. Just like what I do. If you all have followed me in Philly Capital back in 2021 or 2020, you should know my style on. I really love doing this. All right. So your feedback matters. All right. So for this, okay, let's start on venture. All right, venture has a weak bearish trend starting on this. So this are likely a mean reversion trade that we are seeing. All right. But however, I think we saw a first round of bull update after the removal of the venture out of the CIMB, and then after that followed by some bearish downside. But I think given today a weak opening is due to some similarity. But I think momentum-wise, it's starting to pick up. I think we can see that ROC is starting to pick up again. So likely you can risk to reward is not bad. You can actually place a stop at maybe at $12.28 and then bank on buy above to $14.49 on this. All right. And then for Keppel Corp, okay, so Keppel, you know, imagine, I think Keppel is right now entering into a bear trend, first leg of bear trend. You can see that there is a bearish flag ongoing. Okay. Prices, if it breaks below the flag, it's likely to further aggregate the bearish trend. So wave 1, 2, and then third wave, I think we can look at the support at the near the support at here. Okay, so 1:1, we can look at $6.15, but I prefer to look at $5.95 with a 123.6% on this. All right, so I prefer a downside on this. So uptrend line 6 months has been broken. So this is the stock that I won't be a stock that most likely I won't touch on. MACD has already turned bearish. We can see that highlight the negative histogram and the crossover. So this is likely a downside trend on Keppel Corp. All right, so next one, Q&A, take on. Okay, CapitaLand. CapitaLand, part of my transporter as well. Also a mean reversion trade. Sorry, the internet is a bit laggy today. Okay, never mind. I'll go through. Hey, sorry guys, I don't know what happened. The trading view is not responding. Okay, now it's responding. Okay, so Capital Invest, I did a transporter pick on the day on 25th August, and then it went up, netting again, but it fails to break above $3.22. Now it's a sideways. So right now it's still on a bearish trend. Too early to tell where is the stock is going to other than this bullish divergence. One thing I note, I will still, if I'm a trader, I still hold on to the buy from here because my stop is actually $2.97. So there's so much potential on to the upside. Well, with that, I think I'm going to hold on to this unless it breaks below 307. Then maybe I'll consider cutting some of position away. All right. With this climax sell down, I think exhaustion is setting in already. All right, for this so I think selling is remain weak, narrow with this consolidation here. I think they are trying to gun for something big going forward. All right, if it breaks $3, then I'll just cut it on for capital. All right, hope that answers your question. Given a can still do trend following strategy. Can. US stock, yes, US stock you can do trend following strategy. Okay, I'll give you an example on Apple. So on Apple, how do you do a trend following strategy? Right now, it's still on bearish trend, but majority of trend is still on the upside, right? So based on early wave power, we are the wave 3, wave 4. So what I will wait for it to dip in the pocket of 164 to 171 region before attempting a rebound on this. So it's A, B, and then one more C, perhaps even lower at 158. So rightfully, I think we can still do a trend following strategy. Also, I want to use this time, right, to say, because I saw, I think Zachariah asking, do you use monthly time frame or weekly time frame? Yes, I do. All right. Because I want to see the major trend ongoing on this. So for Apple, major trend still up. All right. Parabolic rise, break a new high. So we gotta see a new high on the longer time frame. So uptrends, trends to remain. But for daily, not so, because daily has already broken out of the Ichimoku. So a short call is more probable. So we might actually goes down to test 164.56 on this as well. All right. No problem. Yeah, welcome. Okay, then Cisco, one of my transporter pick on, I think in June, when I was covering my colleague when he go for surgery. All right. So Cisco uptrend is still ongoing strong, but seasonality wise, September is going to be weak, so it has gone down. So let me do Cisco. Okay. Cisco system, July 12th. So let's take a look at Cisco. So Cisco, you can see that what I did is more of trend following also, despite consolidating, like what happened in SGX. Intraday, I think upside remains, and then ascending triangle. So back in 12th of July, it did break a new high. So right now, Cisco is on the new high. But will you want to buy here? No, I don't think so. I will wait for a pullback, either first at 55.27 or to a lower at 54.15, or even you can deeper allocate your largest onto the resistance support at 52.56. Because I think this one is looking for a deeper pullback already. Although overall trend is still on the upside again. All right. Okay, Alibaba. Alibaba is more of a sideways trend. Okay. I would say that I'm tilting towards a short call, but I won't call a short right now, is because I think there's a chance of rebounding at 84.05. How strong the rebound is, I'm not sure. So looking at this is much more of a range bound sideways market. No high lows, but you can see that the trend has been consolidating within 80 to around $100. So right now it's likely to trend lower to either test first up 83 but I'm tilting towards $80.33 for a rebound to the upside again. So range bound trading, sideways market, if you want to really do for short term, is really buy high and sell low. Mean reversion is really buy low, sell high, and then sell but for trend following is buy high, sell higher. This type. All right, I hope that answer your question on BABA. And then lastly, Genting, a bit of disappointment because it recently had good result. And then Genting has already gap out on good result, but it fails to sustain. And then after that, it came down all the way, break below 88 cents. Next support I'm looking at will be 84 cents really. But whether it will be a rebound, I'm not sure. All right, I did my transporter pick on this day on the 7th of August. And then after that, it gap up, but it fails to sustain. So again, this is one of the failed transporter I have on this. All right, last question before we call it a day will be on C Limited. C Limited, I advise not to touch. Prefer Grab Holdings. Okay, so C Limited can gap down, but not much volume, not much movement. Momentum has been weak. Despite oversold crossover, so fundamental is not good. All right, and then rebound upside, whether can we recover is still a mystery, but I'm looking at 31.96 going forward on this. All right, and then yep, and then this is kind of like I won't really look on this. All right. All right. Okay. KCR's Nasdaq, S&P, and Dow. Okay. So I'm going to use the Dow futures. Oh yes. Use the Dow futures. Okay. So so for Dow futures, if you look at that, this is the corrective structure that I'm looking at. So this larger A. This actually one more upside to B is actually over here, or this may be a B, we don't know. All right, but larger corrective, I think we are looking for one more upside, testing 35,500 before correcting down to the support at 33,000 on this. These are E-mini futures. Momentum wise, you can look at MACD is starting to turn lower, so despite any upside is remain corrective. Stochastic has already all along shown in August that we are actually overbought. In fact, overbought, right? You can see that what I mean by just now, what earlier on the slide, right? That what are the structures? So this is the structure that I'm looking at is rather corrective, and the rising wedge. Oh my God, is highlighting that there may be a potential breakdown going forward on this. All right. So yeah, I think that's all from my side. I think maybe I do Nasdaq S&P 500. I won't touch. Okay, I'll do a Nasdaq futures. So Nasdaq futures, same thing. A double top and then came down, but I think clear selling with one more upside to 1738. Major support, I'm looking at 13929 on this. How do I derive this number? You can there are various ways. One is the retracement level, so 14, and then another 1410. But I prefer a lower. I think there will be a strong impulse downward move on this. All right, I think that's all for my sharing. I think I really thank you for most of you that stay on. Sorry that it's a bit overrun to 8:45, take up a lot of your time. But thanks for giving me this opportunity to do a sharing my strategy. I'm looking forward for next month presentation. Next month, I think if everything goes well, I think I will use, I'll touch on Ichimoku. And then I'll touch on the volume, how to use volume effectively, and in depth on how to use the MACD and this effectively on this. All right. So that's all. I'll see you all again next month. Nixon, to you. Thank you.
Yes, right. Thanks, Viren, for your sharing. I know there's a lot of questions, so maybe next time what we can do is you can start keying in the stock that you want Viren to take a look from the start, so that we have more or less an idea of how many stocks we'll be looking at, and so we can actually plan our time better. So just a reminder, do give us your feedback. This is important. And also a quick reminder that tomorrow we have Singfu session. Singfu session will be more of a workshop. So he's touching on this super stock TA analysis. So do join if you're interested. So like I shared before, all the links can be found on our webpage. I will share that again here. Okay, hold on, let me get the link for you. Right, so that's in the chat box. And also, before we end, we run session is actually for next October, let me see, October 12th, I think. Let me check. Yes, 12th October is his session. So for those of you who are interested, we have not listed the session on the webpage yet, but you can actually pre-register now. I will also share this link with you so that if you're interested in Weiren's next month's session, just pre-register by this link. And then Zoom will actually remind you when the session is up. So with that out of the way, I'd like to thank everyone for your participation. I hope this has been a useful session. Of course, thanks to Weiren as well. We'll see you very soon, hopefully tomorrow for full session. If not, then next month for Weiren's charting markets again on the 12th of October. So with that, I'll see you all. Thank you, everyone. Have a good week ahead. Bye-bye.